What's up, everybody? Good morning. Hope everybody's doing great. We are going to get started here in just a few seconds, making sure my audio and video is working properly. We'll get started here in just a second. All right, hope everybody had a great weekend, had a great Easter, spent some good time with your family. I know we did, so let's go ahead and jump right in. We're at Navigation Trading Live. So what we like to do here is we're going to share our trade of the week. We like to go over some upcoming announcements and events and things that we have going on to keep you up to date on what's going on at Navigation Trading. And we always like to choose a topic just to go over and give you a little bit of education, give you a little bit of explanation on questions that you might have. So first thing I want to talk about is some announcements, a couple housekeeping notes. So really exciting stuff coming up. We've got a new course, and that should be totally ready to be released. If not next week, then the week after. I don't want to spill the beans on what it is exactly, but it's some really good stuff. A little bit something a little bit different than we've been doing in the past, which is strictly just based around more income type trading. So really excited about that one. Hope you guys will enjoy that. Next is we've got a book coming out, and that is, and it's not like your typical options trading boring book. Hopefully, hope you guys get more out of it than that. But it's actually a strategy book that really encompasses all the different strategies and philosophy and everything that we do here at Navigation Trading. So it's going to be kind of an all-encompassing book all around the strategies that we do here at Navigation Trading. And really, I want it to be used as a guide, for newer traders who are just getting on board, and B, as a reference guide for those who have been maybe trading the navigation way for a little while, but still need to look back and reference certain topics on different strategies. So it could be used for that as well. So really excited about that. We will be that'll probably be next month when that comes out. So stay tuned for that. It's kind of in its final stages of editing right now. And then lastly, as far as announcements, I know I've been talking about this for about at least 3 months now, but we've been talking to two of the top options brokers, including TD and TOS, as far as getting a new lower commission rate for our students. So they've been just backed up. We were kind of in a queue, and they kept telling me, yeah, a few weeks out, every few weeks. It was another few weeks out. And so I apologize for that delay, but kind of out of our control. But we are in the process of getting that deal done. So stay tuned. I'm not going to give a time frame on that one because I just don't know. It's really in the hands of the brokers we're working with. But TD, as well as one other one that I'm not going to mention yet because it's a pretty cool deal. Both of them are top-notch brokers, but they have different things to offer. So we'll be making that announcement. Soon as well. So stay tuned for that. And don't forget, this event is all about you. Every Monday morning, 8:25 Central Time, right before the markets open. If you have any questions or topics that you want us to cover, shoot us an email or leave a comment there on Facebook and YouTube. We stream live from our Facebook page and our YouTube channel, so feel free to leave comments there as well. Okay, so first topic, the topic I want to cover this morning is actually a question that came in from one of our members, Jesse, and he said, do you think you could talk a little bit about margin? I have been approved for margin on my account, and as much as I've heard the word thrown around, I realize I don't know much about it. Anything I should watch out for? And this is a pretty common question. Margin in the traditional sense, and I put up some definitions here, which I don't really like putting up definitions, but I think it's important to understand the different types of margin. There's the opening bell. We'll get to the platform in just a minute. The definitions of margin could be an amount of tradable capital that you have in your account. In options trading, margin also refers to the cash or securities required to be deposited by an option writer with his brokerage firm as collateral for the writer's obligation to buy or sell the underlying security. So I like to put this into practical application. So for example, your broker typically uses a 2 standard deviation move as their risk. So that's the required capital. So, if you put on a 1 standard deviation strangle, for example, and it requires $1,000 of capital, where did the brokerage firm come up with that $1,000 requirement? Well, what they basically done, it's a little bit more complicated than this, but typically what it comes down to is that if that underlying symbol had a 2 standard deviation move, they look out that far, the broker looks out that far, and that's the amount of risk that they perceive for that underlying trade. Okay? And so that's the buying power capital that they're going to require to put that trade on. So another kind of synonymous term for margin, TOS refers to this as buying power reduction. Okay, so when you're logged into your Thinkorswim platform, you see buying power, stock buying power, option buying power, and when you place a trade, it'll reduce your buying power by so much. So that's the amount of margin that it's referring to. And then down here, I also put, because I think traditionally a lot of people think of margin as debt or borrowing money from your brokerage account, and margin can be used in that capacity too. So if you buy on margin, forget about options trading, let's just say you have an account that you buy and sell stocks in, margin would refer to basically a loan from your broker to purchase more stock than you have available money in your account. So you can buy stock on margin. And typically most brokers offer you 2-to-1 up to 4-to-1 margin on buying stock typically. So if you have $100,000 in your account, you're going to be able to actually buy $200,000 worth of stock on margin. And brokers have margin accounts, and so you can apply for a margin account, and margin accounts allow you to trade stock on margin as well as allows you to trade options and different spreads and so forth. I talk a lot about that in our free course, Trading Options for Income. So I'm not gonna go too deep into that. Just understand that when you buy on a margin, essentially you're borrowing money from your broker and allowing you to buy more stock than you actually have money in your account. So the last thing I want to talk about in regards to margin is there's a couple different types of margin accounts. There's standard margin, which is kind of what I just went through. You have to have a tier 2 or standard margin account to trade spreads and trade options in your account. Then there's another type of margin account that you're eligible for, and Thinkorswim, for example, only allows you to have portfolio margin if you have over $125,000 in your account. And then you got to fill out some questions and make sure that you know what you're doing as far as trading goes, and then you can apply and get accepted for that portfolio margin account. So I trade on portfolio margin, and what that does, the advantage that gives you is that it basically gives you a little bit more leverage. So what they do is they actually look at all the positions that you have on in your account, and they base the amount of margin that they require to put on each trade based on what else you have in your account. So they understand that that your account is all these different positions have some type of correlation to them, and some are uncorrelated. So they give you margin relief for having uncorrelated trades in your account, therefore reducing the amount of capital it takes to buy or put on certain positions. So just gives you a little bit more leverage. Got to have over $125,000, but if you do, you can apply for portfolio margin. And it actually works I don't want to say similar, but it works actually pretty similar to what's called span margining. So there's the margin regulations that cover the stocks and ETFs and indexes, and then there's also a totally different regulatory body that covers futures, and that's known as span margin. And span is based on a sophisticated set of algorithms that determine margin according to a total portfolio's assessment of the one-day risk for a trader's account, okay? Which is kind of the same thing that portfolio margin does. The difference is if you trade options on futures, you automatically get that span margining, which is a little bit more leverage, and you don't have to have over $125,000 in your account. So if you're not permissioned for futures, you should be. It just gives you another kind of arrow in your quiver. There's some really good trading vehicles. A lot of people hear kind of futures and margin, and they kind of think, and all of a sudden their hair on the back of their neck stands up. They think there's some risk, like if they place a trade and it goes bad, they're going to lose their house or something like that. It doesn't work that way. You've just got to keep your position size small, and these margin accounts really give you a lot of advantage. So hope that was helpful. If you have any other questions on margin, you're probably best off to contact your broker to discuss specifics about your account based on the account size, your specific broker, and how it affects the positions that you put on in your account. But hopefully that was a little bit more enlightenment on margin that is helpful for you. So now let's go to the platform and do our trade of the week. So let's see what's going on in the market. So stocks are up just a little bit. S&P's up 4.5, Dow's up about 50, NASDAQ about 17.5, Russell up about 3. You look at bonds are fairly flat, down a little bit. Notes are up. TLT, which is the bond ETF, pretty flat. VIX is down a little over 3.5%. Obviously, with the market up, that typically means the VIX is going to be down. Volatility is going to be down. We've got oil down about 1/3%. You can see oil's had a nice little run. It's starting to curl over there a little bit. Gold is pretty flat, and in fact, we'll come back to gold. GLD is going to be our trade of the week. So we don't have a GLD, we don't have a gold position on with our navigation alerts portfolio. So we're going to go ahead and put on a GLD position. We'll come back to that. Natural gas, UNG, we're starting to get a little bit of a creep up in volatility there, but we don't have a position on in natural gas at this point. See all the grains are fairly flat to down a little bit. Well, wheat's down about 0.75%. EWW is up 0.75%, so it's having a nice up day. FXI up 0.25%. The euro up 0.25%. Emerging markets up about 0.5%. Emerging market index, EFA, same. EWZ up almost 2%. From its low. It's got some nice high implied volatility there. In the stocks, Apple up about 0.5%, Facebook up about 0.5%, Netflix. We've got a lot of earnings. We got a couple big earnings announcements this week. Netflix actually announces after the market closes today. Facebook on May 3rd, Apple on May 2nd, Google on the 27th, so here in about a week and a half. Tesla May 3rd, Amazon 4/27 here in 10 days, Starbucks 4/27, Goldman Sachs tomorrow before the market, and IBM after the market tomorrow. So got some big earnings announcements this week, which hopefully provide a little bit of volatility in the market. But let's go back to GLD. Like I said, we've got implied volatility. The percentile's at 59, so it's over that line in the sand that we like to draw at the 50 level. meaning we know the options are priced higher than they have been on average over the last 252 trading days or last 12 months. So what I want to do here is I want to put on an iron condor in GLD. So if we go to the trade tab, start on the call side, we can look at the 20 delta, in this case the 21, sell iron condor. And I like to go 3 points wide with the wings here, so we're going to go to 131 for the buy, for the long call. If we go over here, go to the 119 put, and 3 down from that's 116 will be the wing that we buy. So if we analyze that, I've already got one on here, let's take that off. So looking at a credit of about 85 cents. We'll probably have to give up a penny or two to get filled. Total risk 215. If we set our slices to break even, the 520, change this to 520. And if you're a little bit lost right now, this is all detailed stuff that we teach in our courses. So if you're not familiar with how to set these up, you're gonna want to go back and watch the courses for all the details. But as you can see, we've got a little bit of a little over a 61% probability of profit at initiation. With the way that we manage these early, looking for about 40% of max profit. Typically going to win about 85% of these trades. So I'm going to kick this up a few contracts, which is about 860. Looking for a max profit of about 340. And this looks good. So this is what I'm looking for. So I'm gonna get off here. I'm gonna send this out as an alert. If you're not a Navigation Alert subscriber, feel free to go to the website, click on the 2-week trial, and check that out. This is we do alerts like this every single day, and if you want to be a part of that, go ahead and sign up. It's a great service. We've got a lot of great feedback on the alert service, and so if you haven't checked it out, go check it out. All right, guys, have a great week trading. If you have any questions, leave comments or questions here on Facebook or YouTube, or feel free to shoot us an email. Happy trading. Have a great week.